Welcome back to the Dividend Diplomat YouTube channel, everybody. Lanny, Bert, you know us by now, the Dividend Diplomats. Guys, we are talking the biggest, the most exciting matchup you could possibly have in the Dividend ETF showdown. You are talking Jordan versus LeBron for the best basketball player here. You're talking Hogan versus Macho Man. You're talking Rock versus Stone Cold. That is what we are doing in this video today.
Well, let me tell you something, brothers. Make sure everybody smashes that subscribe button, gives Bert the Hurt and Lanny a nice thumbs up here for the Dividend Diplomats. Now let me switch over to the Rocks. We're trying to reach the millions and millions of dividend investors out there, those pursuing financial freedom. The Dividend Diplomats got your back. We're here to educate you on what stocks and how to help orchestrate your portfolios.
That's right, everybody. So this video is going to be a fun one here because it's going to help me drive an investment decision I'm probably going to be making in the next couple weeks. So I wanted to put the two of them side by side. So for some backdrop, I'm trying to clean up my portfolio. I'm trying to slim down the number of logins I have because let's be real, everybody. It sucks when you have to monitor and maintain on different websites in there. I use Fidelity for my brokerage. I love Fidelity. It can get you any kind of account you want. I have from an old previous employer, 401k funds, sitting out there. So what I'm doing is I'm going to be moving a big chunk of that from Vanguard to Fidelity. With that, I'm going to get access to Fidelity's full suite of investments. So I'm going to take a look at the mutual fund I had them in that was one of the limited options in that portfolio, and possibly move them to two dividend-focused ETFs. And Lanny, are there two better dividend ETFs to put side by side than the two of these funds?
Guys, this is the battle that we see on our Twitter, on our YouTube channel, in the YouTube comments, guys. Every single time I talk about Vanguard, high dividend yield, VYM, the other shareholders of SCHD come out of the woodwork and they want to go toe to toe with a great one.
Yeah, we put a poll up a few weeks ago here for putting VYM versus SCHD and what people invest in, what they prefer. And let's just say, I don't know if I'd say they came out of the woodwork, Lanny. You got hit with like a fire hose of people that were saying they prefer Schwab versus Vanguard. So what we're going to do here, we're going to talk through these videos. We're going to put them side by side. We're going to look at some of the metrics. We're going to look at some of their top 10 holdings. We're going to talk about their dividend yields, some of their investment strategies, and just have a discussion and see if it can help drive how I'm going to potentially invest these funds into the future as I make that decision over the next few weeks.
There we have it, guys. Two massive dividend ETFs, dividend growing ETFs, two very different dividend ETFs. Bert, do we want to start by talking a little bit about the composition of these ETFs?
Yep. Yeah. Some of the investment strategy for what we know about the company and how they build their portfolio. I think that's a great idea.
All right, guys. So, we'll dive into both VYM and SCHD. Again, two very interesting top 10 stocks of each, and I would argue, VYM is definitely a much bigger basket of stocks. They have what, over 400, Bert?
Yep. They have 443 versus SCHD's 104. Yeah, so they're hanging right around the 100.
Yeah. So about 100 guys. So four times the number of stocks you're in VYM, which probably reduces volatility because Bert, in the year to date, who's up or down more than the other?
No, you're right there, Lanny. I think that's a good point to start here with the volatility. VYM's down 6.25% year to date. SCHD is down 7.67%. The difference isn't large, but it is one to note nowadays because you have less stocks to diversify the performances amongst them.
Now, these top 10 are pretty interesting.
Yeah.
In fact, there aren't too many shared top 10 stocks in each of these dividend ETFs.
No, VYM's top 10 is some of our favorites. Some of our foundation stocks are sitting there at the top. J&J, personal favorite. ExxonMobil, Procter & Gamble, JP Morgan, Pfizer, Chevron, Home Depot, Eli Lilly and Company, AbbVie, and Coca-Cola. That makes up their top 10, and that represents 23.53% of there. So that's not a large percentage of their holding. There's still 75% that make up the other 433 stocks that are held in VYM.
Yep, and then when you slide over to Schwab's SCHD, the first one is Texas Instruments. The next one, Pepsi. Then you've got Home Depot, Cisco Systems, Coke. There we find, we have a match in Coke. And then you slide down the list to Amgen, Merck and Company, Broadcom, IBM, and
Yeah,
Pfizer. Pfizer is also,
for sure.
correlated, and Home Depot. So you have Home Depot, Coke, and Pfizer that's shared. But the
Yeah,
top 10 represent over 41%
it's
of the
insane.
ETF.
And it's interesting that it's weighted. And I think another cool difference between the two is how they go about picking their funds too, and the strategies. Because you would think high dividend yield ETFs, they're pretty comparable, and that's not exactly what you see. Let's start with Vanguard here. What are they tracking? They're tracking the FTSE High Dividend Yield Index. They're looking for companies that pay an above average dividend yield, and they have a history of it. And I think that's interesting as a dividend growth fund. They don't really get into the specifics of like how they're picking their high dividend yield stocks. It's just a pretty generic statement. They have a history of picking above average dividends. Is that high average dividends amongst their industry? Is it a certain benchmark percentage that they use? Vanguard doesn't necessarily specify in there versus Schwab, which is pretty much more transparent with it. They follow the Dow Jones US Dividend 100 index, hence probably why they have about 100 stocks. And they pick stocks that have at least 10 consecutive years of increasing dividends. So they're a little more restrictive in the companies that do it because they tie it to that 10 consecutive years of dividend increases.
Very interesting, guys. So, two pretty different perspectives. Obviously, you can just tell by the number of stocks in each ETF. So, which one is the best one right now? Which one is a great one for Bert once he's has the option in front of him to kind of invest his rollover IRAs from the old 401k that he's doing right now? Pretty wild, pretty interesting.
Yeah, and let's take a look here at the expense ratios between the two of them, because that's always something that we're monitoring when we're going with ETFs. ETFs traditionally are known for lower expense ratios. They're not as actively traded as mutual funds. So the goal is to see those low expense ratios with the ETFs. And honestly, we've always focused on Vanguard. That's one of Vanguard's thing. They make investing affordable for the average employee. They push those expense ratios down as low as possible. Lanny, what is VYM's expense ratio?
6 basis points or 0.06%. So, pretty low.
Yeah, and then when you look at Schwab, it's the same. 6 basis points is what's reported on their website. So both maintain a low expense ratio there and get a nice thumbs up from the comparability standpoint between the two.
There you have it, guys. So pretty much a nice apples to apples there. But we have to get into assets under management. How big, how many assets are these funds managing, Bert?
Yeah, I think all right, let's take a look there. VYM's assets under management 44 billion. SCHD's assets under management is 37 billion. So they're about the same size funds. There's, I mean, small billion-dollar differences here or there, but nothing that's overly material different between the two.
It's a pretty similar size there. But let's look at some of the dividend metrics that we can. Let's look at that price to earnings ratio for each of the ETFs, because I know that's a big factor when buying stocks. How about when you're buying an ETF?
Yep. S&P 500 is around, it's in the high teens, low 20s right now. That's typically where the S&P 500 is. So keep that as a benchmark here as we're comparing the fund's PE ratio to the market and each other. VYM's PE ratio is 14.1. Schwab's SCHD is 14.3. So both are undervalued compared to the broader market, but they're pretty much in line with each other. So I think that's interesting to see that they're valued about the same.
Valued about the same. Now, the dividend yield as reported, which I don't think it tracks the trailing. I don't know. It seems pretty interesting.
Yeah.
But right now, as reported on their pages, more than likely,
Yep.
BYM shows 2.89%, and then SCHD is a 3.31%, again, as reported on their pages.
So yeah, those are the reported yields. It's interesting to see that SCHD has a slightly higher yield premium compared to VYM, both of which, though, are living up to their name. They're a higher yielding fund. They're well above the S&P 500, so it's great to see there. let's talk about the topic of dividend growth, because I think that's one thing that everybody's going to have eyes on when they're evaluating these two companies. Sure, there's a higher dividend yield, but how much is that dividend growing? And Lanny, I know you are obviously with your weekly VYM investment strategy, you are all over that dividend growth from VYM. You watch it like a freaking hawk because it has such a material impact on your dividend income, especially as you push towards financial freedom. What was VYM's dividend growth in the second quarter?
Second quarter, it was 12.59%. So not too bad, but SCHD said, let me get the cork, pop it in the bat, and let me swing.
Yeah, compared to the previous year, it was 30.43% when you take the Q2 2022 compared to Q1 2021. I mean, obviously both are great, but SCHD blew it out of the water. I mean, there's nothing more to really say. So it's awesome.
And then over a 5-year period as well, VYM has only returned about 34-35%, whereas SCHD's total return right now is over 63% on Schwab's dividend yield ETF.
I mean, it's interesting to see the performance of the two side by side and see the holdings and kind of go through this exercise of what we've done. I mean, as I'm seeing it here, it's becoming clear the difference between the two funds, and always does every time we go through this exercise. VYM has that larger basket. They have more stocks in them. Their yield's a little lower. Their dividend growth is strong, but and they're delivering great return. I mean, you can't complain about some of the numbers of what VYM's spitting out. But when you look at SCHD, sure, their basket is smaller. It's 25% the size of VYM's basket. Their top 10 holdings make up a significantly larger portion of their overall holdings there. So they're concentrated a little bit more. Their dividend growth was great this year, and their yield is slightly higher. So you're getting a little premium. And what you said, Lanny, at the beginning, their swings are a little bit larger because they have less stock. So 5-year, they've crushed it compared to there, but they're down a little bit more year to date, and they're down a little bit more over the last 52 weeks. So you're going to get a little more price volatility with SCHD.
Yeah, and SCHD's been around for 10 to 11 years. VYM has been around for 15 to 17 years, which is probably why maybe the assets under management are a little bit larger with VYM because it's just been around for a little bit longer. So, keep that in mind. Don't let the assets under management skew you in any way.
Yeah, and I think it's so hard going through these analyses because it's everybody is so passionate about one versus the other, but we can also leave this saying that both of them are just great ETFs too. You're not going to go wrong looking at either one of them. So I think it's going to be interesting over the next few weeks, even taking more of a deep dive, reading that more about each of the funds and more of the holdings, seeing how I'm going to potentially allocate this money that I'm getting in between the two funds. Both are going to be an improvement over what they were in, but it's just going to be how and what's that final decision. Keep an eye on our YouTube videos because I'm going to talk more about it at a later date. And I'll probably write an article about it too on our blog. So please keep an eye out for that.
I think everybody's going to be pumped up to hear what you do. No matter what, it's going to be a great move because you're going to add more dividend income at a high dividend growth rate going forward. So at a low expense ratio, I mean, I think you really won't be able to go wrong, but I think we're all pretty pumped up.
Yeah. So everybody, let us know in the comment section, obviously, what you think about these two ETFs. And just out of curiosity, throw something else in there for if you had $1,000 to invest, how would you split it up between these two ETFs? Would you go 50-50, 75-25, or allocate all one versus the other? I'm curious to see what you would do in this situation. How would you advise somebody that just got $1,000 and wanted to pick between the two?
What you gonna do? Let us know in those comments. As Bert said, what other stocks you're buying right now this week during the week of August 8th. If you haven't already, definitely like this video, subscribe to the channel. That was your boy Bert and Lanny from the Dividend Diplomats. Over and out.